Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the TGI Friday. Thank God it's Friday, the 3rd of May, Bull versus Bear webinar with Steve Miley here on the call for Trade Day. It's Jobs Day and Non-Farm Payroll NFP Day today. So helmets and goggles at the ready. The end to what has been a very busy data central bank earnings heavy week. So already this week we've had Fed, we've had Apple, we've had Amazon, we've had PMI data, and now we're about to get the US employment report and further PMI, non-manufacturing slash services PMI data. So that's been a super busy week and drawing to an end of this week, but still potentially more fireworks to come. So let's start off with the calendar for today. So all eyes now on the jobs report we have in just under 1 hour. Please do remember, particularly if you're new to Trade Day, there may be some people following the webinar now or maybe playing catch up on the recording, but who are maybe getting it before the employment report, which we get in just under 1 hour's time. Remember, no trading, no holding positions, no orders in the order book either between 2 minutes before and 2 minutes after the release of the US employment report, which we get in 57 and a half minutes time from now. Okay, so please do keep that in mind. US employment report, what we're watching, well, the headline numbers are going to be the unemployment rate expected at 3.8%. We've got the NFP, the non-farm payroll number, expected at 238,000. And also don't forget the average hourly earnings month on month at 0.3%. That's, a potential measure of what goes into inflation. So we're watching out for all of those numbers today. The headline number, non-farm payroll, is obviously one most people watch. If we go on though till 10 o'clock Eastern time today, we also don't forget, don't take your eyes off of this. This is not an embargoed piece of number from trade. This number from Trade Day. You can trade over this number, but we do get the ISM, the US non-manufacturing slash service sector PMI data out at 10 o'clock today Eastern time as well. So watching out for those. So those are the critical numbers. Now, I will say one thing. We'll come to some stuff about the data in a minute. But remembering here, some of you guys may trade, well, not on the data because you can't trade on this data, but you might look to be reacting to the data. Remember, maybe counterintuitively, right? Good data isn't necessarily good for stocks. Okay, and why is that in this case? Well, because with the Fed very much watching the inflation numbers in, and that's why I pointed out that average hourly earnings number. We don't want that. If you're a bull on stocks, you don't want that number spiking up. So you want this number to be tracking down, the average hourly earnings number. However, on the employment report, a strong employment report is going to make it less likely. So even though that shows a strong economy, strong labor market, potentially a strong consumer, it's not necessarily good for stocks because a strong number, a big number, say on the NFP number, the non-farm payroll number, this 238. Let's say that came in at 300,000, like we had last time was 303. Let's say that came in over 300,000. It means that the knee-jerk reaction might be initially up, but what we could see is then there's an anticipation then very quickly from the market. Well, the economy is strong, the consumer is strong, the jobs market's strong. The Fed are less likely, the Fed are less likely to then be rushing to cut interest rates because they're concerned about inflation. So then that's seen as then a negative for stocks because stocks want interest rates obviously lower. So so that can be, and then conversely and sort of counterintuitively again, if the number's weak, let's say this number came in at sub 200,000, 180 or something, the market might initially jerk lower. But then the market says, well, actually, a lower number, a slowing economy might make the Fed quicker to start to cut rates. And so that might be good. So don't be surprised if the number is out of line that we get a jump one way and then back the other way. Okay, counterintuitively. My gut feel is the market is in bull mode. So even if we get a push lower, you buy into the dip. If we get a spike straight up, then you continue with the spike straight up. That's my view, though, just my view. Okay. So that's what we've got coming up today. And if we look in here, US jobs report to show continuing streak of big employment gains. So this is ongoing gains in here. Downside surprises could be meaningful for Fed policy outlook. That's what I've highlighted there as well. Okay, forecasters see strong job growth and cooling wage pressures. Again, we're watching the wage pressures as well, how that can track into inflation. Solid US job wage growth expected in April as well. Okay, so the other thing is we're still looking at the earnings calendar now. Today's earnings are not particularly exciting in here. We've had most of the stuff out, nothing really big in here, and most of the big earnings are behind us. We still do have out on the horizon, a long way out, and still about I think it's on the 22nd, 3rd, so that's still 3 weeks out nearly. We have the Nvidia numbers from the Magnificent Seven. We've only got Nvidia, but if you look into actually what we've got next week in here, Walt Disney maybe a little standout there. We get next Tuesday, nothing Uber maybe, I mean not huge in here, Airbnb, but we've pretty much got most of the big stuff is behind us now. But what we did have yesterday, and just to circle back, is yesterday we had Apple. Okay, so number 6 of the Magnificent Seven. The numbers, only a slight beat on the revenue and only a slight beat on the EPS, the earnings per share. But there were a lot of other things outside of the headline numbers of revenue and EPS earnings per share that were seen as a positive. One in here, Apple rallies on upbeat forecast, record-setting buyback. The buyback was the big one, biggest buyback in Apple's history. $110 billion, I think I saw. $110 billion stock buyback, largest in US history. Okay, and then there were some other positives in there as well. Apple rallies on upbeat forecast, record-setting. Oh, that's the same headline. What else we have in it? Apple's 110 million stock buyback, largest in US history. Shares up nearly 8% in here after hours last night. And iPhone, surprise iPhone China growth, these lingering questions. So there were concerns that iPhone growth was slowing down in China, and then that was actually picked up, so seen as a slight positive there. Apple unveils record $110 billion buyback. And so, Apple stock up this morning and helping markets higher. Wall Street ends higher. Yesterday's Fed signals dovish bias, so that's kind of playing a little bit of a catch up in here, but certainly a positive. Having had the very whipsaw price action that we saw initially Wednesday night post-Fed, Thursday, we reconciled to the upside. We spoke about that yesterday, potentially further growth, further upside. The market was already up when we came on this time yesterday and continued to keep that solid tone, posting a solid, resilient session yesterday. Just running through 5 things to start your day. Now, if you haven't already, let me just quickly go and open up. If you're new to the webinar, I haven't introduced you this, so bloomberg.com/markets. I'm going to take that. I'm going to throw that in the chat now. So it's bloomberg.com/markets. You go over here to the right hand side, enter your email address, and this will give you this 5 things to start your day for your own time zone. So if you're in the US, you'll get it on the US morning. I get mine in the European edition, comes through between 6:30 and 7. I also look at the Americas version as well, just before we come on in here today, just to check through in case I've missed anything. Okay, and if you're in Asia, you'll get it in your early morning as well. So no matter which time zone you're in, you'll get it in your early morning time zone and give you a recap of what's happened pretty much whilst you've been asleep, giving you sleep normal hours during the night time. So you get a recap from in your own personal time zone. So there's 3 of these goes out today. There's a European, a US, and an Asian recap comes out each day. So sign up for that there. You get it into your inbox. Let's go back to the US version here. Look, the Americas version. 5 things that need to start your day. So obviously headline in here, Apple's record buyback. We've already covered that. Tech ripples. Apple have rippled into Asia and Europe. So other areas are doing well from the positivity that we're seeing through from Apple on the overnights. Jobs report focus. We've already spoken about that in here. Fed expectations. I'm going to come to that shortly. But basically now, we covered this yesterday when I went through after the Fed. Now we're expecting the first quarter point cut potentially in November, and maybe even for 2 cuts before the end of the year. And then one, I think I missed this in here though. Look, Goolsbee is set to speak on Bloomberg TV later with more Fed speakers due over the weekend too. So we've got Fed speakers over the weekend too. But Goolsbee, let's see if we can get a time on that. Do we see that on here? No, Williams actually much later this evening, 7:45, very, 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 very late in here. I'm not going to be able to trade that because we'll be closed on the futures side. But where are we? Don't see Goolsby there, so I'm not sure what time that is. Okay, so there we go. What else? M&A battles. Nothing really to bother us too much in there. What else do I have for you? Stocks rally on Apple earnings before US jobs data. We know that already. This is just the recap in here. Michael Hartnett, ex-colleague of mine in here from Bank of America. Weak jobs data could fuel stagflation fears. So he's basically coming in there. But this is, remember, Michael Hartnett in here is a investment analyst. So it's much longer term. So obviously, if we have weak jobs data, then there will be concerns that we've still got some inflation and maybe the economy is slowing in here. And then what would the Fed do? Okay, so that would be more of the concern there. But that's a longer term investing view. However, if we think about it from a trading point of view, a weak jobs report, I think we will see the market initially and then we might see a very, very quick algo spike lower. I'm talking about seconds. And then I think the buyers would come in and it would see a rebound if we saw. And depends how weak as well. It depends how weak would then send the market actually higher. A super weak number would be negative, because then it would be seen, well, actually, this is a problem for the economy. And now maybe Hartnett's right in here, Michael's right. And if we go towards stagflation, that's a real issue for the Fed. Futures rise on Apple, Amgen boost, jobs data on tap. We know all of this already, cover this. Traders pull forward first full jobs. That's what we've already spoken about that. And we'll come to that now on the CME tool. So we said, pretty much no chances in here. We go all the way out to September. In here, potentially a rate cut in here now, but September, but certainly we're looking for a rate cut. Only a 25% chance we haven't got a rate cut by November. And if we go to the end of the year now, only 12% chance we don't get a rate cut. But then we've got in here, what's this, 34, 44, 46, 47% there. So it's 50-50 whether we get 2 rate cuts, because this all adds up to about 50%. So certainly by end of year, we're expecting 1, potentially 50-50 that we get 2 rate cuts priced as now getting priced in. On the overnights in here, Hang Seng managed to rebound in here, up 1.5%, but the Nikkei, the Japanese Nikkei, was little changed. On European bourses this morning, we're up about around 0.5% up across the UK FTSE, the German DAX, and the French CAC a little better, about 0.6 higher. And if we look at the US in here, obviously we added some gains in here yesterday. Cash market, the S&P was up 0.9 and the Nasdaq up 1.5, and we're up further this morning with the Nasdaq up 0.6 on the futures and the S&P up 0.3 in here this morning. I've been harping on about this for the last few days in here, or actually longer than that. This is potentially a topping pattern in yields, okay? And you can see we're breaking, see these little lows in here with these 2 lows, 458 to 456 area. We're right now pushing down in yield through these levels. Now we've got these critical levels. This is the 10-year. The 10-year yield, 450 to 448 area. It's going to be critical now. Okay, we could, if we start to approach these levels, then that's a top in yield and a bottom in price. And if we go to, I'm just going to close that one. If we go to the price charts in here, you can see these are the levels I've been. I would strongly recommend, particularly going for the employment report, that you mark these levels in here. So where the upside levels in there, 116.05 is critical on the 30-year. We could be hitting these around the same time. 108, 22.5, 25.5 critical in here on the 10-year on price. Okay, a move above there could see a base going in price on the 30-year and 10-year bonds and notes, and then that would be a top in yields, and then that could easily send stocks significantly higher. Okay, but it's obviously all going to be on the employment report. And the underlying themes in here, we've kind of been choppy and sideways in here for the last couple of sessions on the S&P and Nasdaq, but this still looks like a bigger basing pattern, and all the risk for me on the technical still points higher. Okay, there's the bond chart in here. So in here, this is the 10, sorry, not the bond, this is 2-year note, excuse me. 2-year note getting up to some important levels as well. Remember, this is a reflection of the Fed. Okay, so you can see in here the levels in here, 101. What's the highs in here? Probably got these on the, if I go back to, or not probably, I have got them. If I go to the 2-year here, we're getting closer in here. Look to these levels. Critical in here, 101, 22, 22, 23 kind of area, 101, 22, 23 and a half, critical on the bonds. If we get above there on the 2-year note, it's also going to be them reversing this trend line. Then we've got the short end leading the way high. So that's another set of levels to watch in here. So certainly watching out for those in here today. 101, where are we? Yeah, 22 to 23.5. That's a critical area on the 2-year note. That's the 2-year. Okay. If I go to the 10-year in here now, 10-year is up here. Okay, this is the next important one. Okay, so 108.20, yeah, same levels I've already given you. There's 22.5, 25.5. Critical levels. If we get above those, then that could really spur stock indices higher. They're already looking fairly positive anyway. All right, guys, I'm going to wrap it up there. I'm going to wish you, let's have a quick nod to the stock. I mean, obviously, you're all trading the stock indices, but, I think the bonds are really critical. I could easily see us here back up and through the highs in here. So there's the ES up through the recent highs above 51, like 55 kind of area, and similar story for the NASDAQ in here, back up to the recent highs. We've got resistance running between 17,950 up to 990. Could see 18,000 here quite easily today, I think. So helmets and goggles on at the ready for 45 minutes time for the US employment report. I think it could be interesting. I'm bullish in here. I mean, I think if it chops lower, you probably buy the dip anyway. I've got an underlying bullish tone on theme on this anyway. It's going to have to be. I think the real damage could be done if we get a very strong number. If you're a bull, you don't want to see a strong number. A strong number. If you're a bear, you do want to see a strong number. I think a strong number initially the market will spike up and then go back lower. And remember, no trading 2 minutes before or after the data release. And finally, please do continue to spread the word about our current promotion, 40% off plus no activation fee. I'm going to wish you once again a great trading day. Have a great weekend too. Try and switch off from the markets, relax, and then we'll be back with you on Monday with another bull versus bear webinar. Bye.